Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, Douglas W. Thank you for choosing to support the channel. First up, and very important, please check the pinned comment below for my future content creation plans for Tesla earnings days in the future. One other thing, I've seen some people confused as to why Tesla's share price is up around 9% so far today. It all has to do with expectations. Now, yes, the stock market is very irrational in the short term. However, Wall Street has been lowering the bar for what they've expected from Tesla. We've been talking about it for weeks, and the numbers that Tesla delivered, and more importantly, what they guided for in the future, was simply better than Wall Street was expecting, and that's the reaction you get. And I think it was a video this week where I said sometimes it's good to have Wall Street asleep at the wheel and to have a lower bar for Tesla stock, because then it's easier for them to jump over it. So here was the bar, and Tesla jumped over it. So here are my thoughts this time around. After watching all of the social media and analyst reactions, I want to be a voice helping people to see the bigger picture. I'm not knocking anybody here. I'm just saying there are plenty of people already discussing the minutia of the report. Backing out deferred revenue recognition, explaining why free cash flow was down to $1.4 billion for the quarter from $3.3 billion in Q3, which, by the way, was partially due to $500 million of debt payments, $2.2 billion in working capital use, the trade cycle with accounts payable versus receivables, etc. And don't misunderstand me, this stuff is good to understand. Some quarters I'll get granular myself, and eventually I'll probably explain some of this quarter as well, but here's what I think we should all be focused on. Tesla came out and said the new Tesla metric everyone should be focusing on is operating margin. But why? The reason is because this has really been the Tesla story already for years, but now is the time when non-automotive parts of the business are going to start making an earnings impact. Fundamentally, Tesla's business is now shifting from that of automaker to that of battery storage maker. Now, of course, we know this has always been the case. However, I'm now talking about this from an earnings perspective, meaning the battery storage and Tesla Energy impacting Tesla's bottom line. The time for Tesla Energy to do that is now within sight, and in a few quarters, it will be impossible to ignore, even for Wall Street. Tesla knows it, informed investors know it, and like I said, one day Wall Street will have no choice but to acknowledge it as well. Operating margin just represents how efficiently a company is able to generate profit through its core operations. It shows us how well a company is being managed, and it tells us how much profit a company makes from operations as opposed to other activities like investing, and this is all in relation to total revenue. A simpler way to frame it, with Tesla's operating margin at 16% in Q4, Tesla made 16 cents for every $1 in revenue after accounting for the direct costs involved with earning those revenues. Tesla has already taken its operating margin from negative 11% to positive 16% in just 4 years, hitting over 19% in Q1 of 2022. It's also important to note this metric will not go up monotonically, meaning in a straight line. We just have to notice the trend over time. For context, Ford's operating margin since 2018 has hovered between 2 and 4%. Toyota's has been between 6 and 11%. Most recently, it sits at 7%. GM's has hovered between 1 and 9%, most recently sitting at 6%. So yes, Tesla's sitting above 16% is very, very good, and they're focused on optimizing this metric now, which means, again, over time, this number should trend up. A big part of why operating margin is now the focus is Tesla Energy and the Lathrop factory. Tesla should mostly be through selling its Megapack 1, which had lower gross margins. So going forward, most if not all Megapack sales will be the new Megapack 2 or Megapack XXL, which should have much better margins. Battery storage deployments are finally going to be able to scale to meaningful volumes for 2 reasons. One, of course, is the dedicated factory in Lathrop now making Megapacks with LFP cells. Second is the semiconductor shortage easing. For years, Megapack was limited more by the chip shortage than Tesla's auto business. And not only that, but Megapack really only got the leftover cells, and Tesla needed these cells to ramp the Model 3 to survive. Tesla has told us they're no longer battery cell constrained. They also hinted that more Megapack factories are coming globally, possibly to be announced in the next 1 to 2 years. More importantly, Tesla's energy margins were essentially break even in 2021. Fast forward to 2022 and look at this. Quarter 1, they were negative 11%. Quarter 2, positive 11.2%. Quarter 3, 9.3%. And quarter 4, 12.1%. Sure, Tesla still only made $159 million in profit in Q4 from Tesla Energy, but on the call, they said Tesla Energy will now grow much faster than Tesla Auto from here forward. Tesla's energy profit grew 52% quarter over quarter in Q4. So if we just assume a 30% quarter over quarter growth for 2023, that would mean $1 billion in profit from Tesla Energy in 2023, and this should be fairly conservative. I'd also add Megapack is recession proof. Utilities have money, and if the economics make sense, hint hint, they do, these utilities will buy. I'd also add that Cybertruck and the Semi are recession proof also. There are at least 50,000 Cybertruck reservation holders who will be willing to pay over $100,000 to get one, and with the Tesla Semi and the fleets, it's again all about the economics. If they make sense, and they do, the fleets will buy. There's plenty of chatter about Tesla's vehicle guidance for 2023 being flat based on Q4 run rates. Tesla produced 439,000 cars in Q4, which when extrapolated out over 4 quarters is 1.76 million cars produced. And Tesla guided to 1.8 million cars sold in 2023. Two things here. First, I think this is a sandbag conservative figure, which of course is wise from Tesla given the uncertainty of how the economy will respond this year. And two, don't forget, almost every other automaker is going to see steep sales declines this year. So yes, flat sales for Tesla in 2023 should be viewed as a win, especially if the recession is as bad as Elon thinks it may be. And yes, smaller companies like Rivian and Lucid may continue to grow from their lower bases, but I'm referring to legacy OEMs. One other note, people are getting the 50% growth situation messed up. Tesla said they expect to grow at a 50% CAGR back in 2020, meaning that's the starting point and we need to keep this as a reference. This means you cannot just take the 2022 sales figure and then multiply by 1.5 and say that this is Tesla's guidance, because that's not actually how Tesla is doing it. They literally put this chart in the earnings deck to clear this up. The 50% CAGR using 2020 as the reference would have Tesla just shy of 1.7 million vehicles in 2023. And yeah, I agree, Tesla is making this way more confusing than it has to be, but it's important to keep in mind. 50% also does not mean 50% exactly every single year. One year could be 40, the next could be 60. Oh, and quietly, Tesla's energy and services gross margins are now positive for the past 3 quarters. I don't know how many times Elon will have to say it, but demand is not a problem and Tesla is getting orders at 2 times the rate of production. Even after price cuts, the team is expecting gross margins over 20%. Tesla Insurance is growing at 20% per quarter and was at a $300 million premium run rate in Q4. While this may not be a meaningful part of Tesla's financials for some time, speaking of insurance, it's already helping Tesla lower the total cost of ownership of its cars, and it's giving Tesla more insight into the cost of repairs, which has resulted in Tesla actually adjusting their designs of the car and software to minimize repair costs. Dojo may come online this year, which would of course expedite the path to solving for FSD. I know people are bummed about there not being a retrofit to jump to hardware 4 from hardware 3, but as a Tesla investor, this signifies a pretty significant jump in technology, processing power, camera quality, etc., making the retrofit unviable. This will then drive trade-in action as owners will want hardware 4, and then this will boost Tesla's used car business as well. I think people are sleeping on Tesla potentially offering captive financing, meaning they would provide loans and financial services for customers to help with offering better rates. Tesla is actually considering this for 2023. People also forget Tesla is a mega cap with superior growth and a massive product pipeline and essentially near unlimited total addressable market. Tesla has grown faster than Facebook, Apple, Amazon, Google, and Microsoft since passing the $10 billion in revenue mark. All the while, as Forward Cap pointed out, you have headlines like this. So don't ever forget the difference between signal versus noise. So in summary, the big picture for Tesla is this. There's no demand problem. Tesla has 3 new products that are recession-proof rolling out during a recession. Auto gross margins should stay over 20% this year, and the real number Tesla is optimizing for is operating margin, which already leads the industry. 2023 is going to be the year Tesla Energy gets more attention, and by 2024, we should be talking about multi-billion-dollar profits from Tesla Energy, and then it will be impossible for even Wall Street to ignore. Tesla is about to give us more detail about the actual game-ending product, the cheaper Tesla on a lower-cost platform that should serve as the robotaxi blueprint at Investor Day on March 1st. All of this while other automakers are losing money on EVs and are still investing money into ICE vehicles that will most likely see major sales declines this year. Optimus is still a call option for Tesla a few years down the line. Think of it like a lottery ticket. You could put FSD partially in that bucket, but Tesla already has 400,000 people paying extra for some form of enhanced autopilot or FSD. Oh, and Tesla can't see who would even be in second place for the FSD race with a telescope. That was the quote of the night right there from me. So yeah, people like Gary Black saying that whenever Tesla solves FSD, they'll have no moat and everybody else will just magically have FSD has to be one of the worst takes I've ever heard, and I stand by that. Tesla has $22 billion in cash, essentially zero debt, is generating between $1 and $3 billion in free cash flow every quarter, which remember is after all CapEx spend to grow the business. Tesla will weather this recession better than anyone else and will come out of it dominating in a way that we have not seen before. You can call me a fanboy or a permabull or whatever you want, but come find me at the end of 2024 and we'll see what's what. All right, a few quick news items. We have a C-suite shuffle over at Toyota. They've picked Koji Sato, who was the head of Lexus, to now be the new president and CEO, which means Akio Toyoda is moving over to chairman, and then the current chairman who worked on the Prius will step aside but retain a seat on the board. Akio Toyoda said that Sato was tapped partly because he loves cars and because of his youth, and that the shakeup is geared toward transforming Toyota into a mobility company, whatever that may mean. Toyota has been under a lot of scrutiny the past few months. Investors and people are now saying they're falling behind in the EV race. So we'll see if this shakeup can right the ship at Toyota. This bit right here that Tesla and Mexico have yet to reach a deal on a new gigafactory is not really news. Of course, we know that. However, what is news, the Deputy Secretary of Economic Development for Nuevo Leon, where this factory may be, said he does not know whether a decision will be made this year. So that's definitely a little cold water on the Giga Mexico narrative, at least for now. I'm honestly surprised this one took so long, but finally it seems like GM will be switching from pouch cells with LG to cylindrical cells in future electric vehicles, following in the footsteps, yes, of course, of Tesla, but recently companies like BMW, Volvo, and Stellantis have all said they're also switching to cylindrical cells. They're also saying this is part of why GM and LG have paused their plans for a 4th battery cell site jointly in the United States. I know there's plenty of complexity when you look at the cells between pouch and cylindrical. However, zooming out, it's really all about wanting the cells that are being produced at the highest capacity, and cylindrical cells seem to be that going forward. GM's going to be dependent on suppliers for cells for years into the future, and of course, they would want the highest economies of scale because that means the lowest cost. If Elon, JB Straubel, and the Monroe team all think cylindrical cells are the way forward, then I guess I do too. Motor Trend went to Frito-Lay and spent some new time with the Tesla Semi, and here's what they found. They said so far, the 4 megachargers they have on site are capable of outputting 750 kilowatts. However, the 4 Tesla chargers are positioned in such a way where the semis have to unhitch the trailers and back in to plug into each one's charge port, but we know that this is actually much easier than you would think. Tesla is also apparently responsible for all maintenance and service for the first year. One of Frito-Lay's drivers said it drove like a car and called it incredibly comfortable. And the windows don't roll down, but they do open enough to make it easy for a driver to stick their arm through to pay a toll or exchange paperwork. From Drive Tesla Canada, Tesla is continuing its expansion into Israel with the first permanent installation of a Tesla store. But this will also be the main service center for the country as well, and these dates have not been confirmed. However, the word is Tesla would open the store in August, with a service center also opening this year. Also from DTC, in a recent software update, it looks like Tesla now gave us the ability to view the cabin camera from the in-car display. Not exactly sure what this might be for, but it's there. And here's the KISS method at its finest.
But again, I think longer term, the story is electric vehicles are here to stay. And I'd be really worried if I was Ford or the other traditional auto manufacturers where the majority of their install base and the vehicles that they sell are gas-powered cars, which we see declining. That's not going away. Right. And by the way, they don't have a great autonomous solution either. They killed that project. So I think that's where the concern should be focused here, on the traditional auto market.
Hope you guys have a wonderful day. Please like the video if you did, and a huge thank you to all of my Patreon supporters.